in to the Apex of Training and Development show. The Apex of Training and Development show. We're going to add a little spice to your work life.
Welcome to the Apex of Training and Development. I'm your host, Karian Casimir. On today's episode, we will be speaking to Mrs. Tamarie James Robert on the subject of money management. Mrs. Roberts is the Business Development Officer here at the Community First Cooperative Credit Union. Mrs. Roberts is passionate about contributing towards the sustainable development of the members and wider society through their products, services, and money management education. And we're here with Mrs. Tamarie James Roberts, the Business Development Officer at the Community First Credit Union. Mrs. Roberts, it is a pleasure to have you on the Apex of Training and Development.
Thank you, Ms. Casimir. It's a pleasure being here today with you. As the Business Development Officer at Community First, my responsibilities include marketing, events planning, as well as outreach and education in terms of money management and about the credit union itself.
It's interesting that you mentioned money management because it will help us to segue into our topic. What is money management?
Money management is pretty much just dealing with all aspects of your finances. So when we think about money management, we are going to consider your long-term and short-term financial goals. We are also going to think about budgeting as well as looking at investment strategies.
Why is money management important?
Money management is important because the financial resources we have available to us are limited. It's primarily, determined based on the income that we make. And for most of us, we don't have any inheritance that we're going to be receiving. So we have to manage the limited finances available to us as efficiently as possible. And so knowing how to apply proper money management techniques is going to help you to do this.
You mentioned earlier that you're responsible for education. What strategies have you employed in order to educate your members on practicing good money management, especially during the COVID-19 pandemic where social distancing is the order of the day?
Okay, for a number of years, the credit union, the Community First Credit Union, has recognized that a lot of our members have had issues with managing their finances. A lot of persons aren't able to save or are borrowing for a lot of consumer type loans, so we'll classify them as. And so we recognize the need to try and educate our members to help them to better manage their finances. So we started what we call a money management session, where we would do an hour and a half presentation just highlighting some of the main money management tips that can help them. With COVID, we haven't been able to really do these face-to-face sessions. So what we have been doing while we work on a way in which to get the money management sessions online is that we've been doing regular tips on our Facebook page. We do tips in the newspaper as well as on our screens for members and the general public to utilize in terms of money management.
And how effective has the training sessions been thus far? Are you seeing a change in the type of loans persons are taking now?
Well, from the feedback from the sessions that we have done, a lot of persons have stated, based on the tips that they received, that they have made changes. So they now understand the importance of maybe borrowing for a land loan as opposed to just a vehicle loan. So we have seen improvement. We honestly have gotten a lot more mortgages and land loans than traditionally. So we do believe that these sessions have been helping persons.
And is there a particular age range you're targeting? Do you go to the universities, to the colleges, to the high schools to educate persons on proper money management practices?
We cover all age categories, right? It is open to anyone. Once you make a request, we are there to serve. So we have done presentations in the secondary schools, we have done presentations at the Antigua State College, as well as with workplaces who have requested. And as mentioned, we've also hosted our own money management sessions here within the credit union, where, regardless of your age, you were allowed to come and attend these sessions. So it's a large cross section of persons. We also even offer a school savings account in the primary schools just to get our children in the habit of saving regularly at an early age.
Thank you, Mrs. James Roberts. Don't move a muscle. We'll be right back here on the Apex of Training and Development with Mrs. Tamarie James Roberts. And we're back on the Apex of Training and Development. We're here with Mrs. Tamarie James Roberts discussing money management. Mrs. Roberts, tell us a little bit about the stages of an individual's financial cycle.
Okay, glad you asked that question. Persons go through three main stages. You have the accumulation stage, which is when you would have just started working. So for some persons, that is from the age of 18. For others, you may be 21. It's just when you enter into the work environment. And that goes up to the age of 30. And at that stage, what we encourage persons to do is to start to think about investing in assets that would appreciate in value, right? What commonly happens is that persons tend to be thinking about enjoyment, so they do a lot of travel loans, luxury items, so like the sports car and so forth, but they're not thinking about assets that are going to increase in value over time. So what we recommend is that you get a land loan, right, as early as possible, and then you can always use that land as a security, as collateral when you're ready to get your mortgage. Because a lot of persons don't realize if you own your land, then you don't even need a cash deposit in order to secure a mortgage loan. A lot of time persons will say, oh, I can't afford a land loan. For instance, they will get a vehicle, a used vehicle, that's $50,000, and there's a piece of land that you could have gotten for $50,000, and in reality the payment for your land loan will be less, because we can stretch our land loan for a much longer period, because we know we can't lose on the land loan, so the payments are actually more affordable. And the deposit requirements as well is lower for a land loan in comparison to like a vehicle loan. Also, we recommend to persons that you start thinking about your insurance. A lot of persons having difficulty securing mortgages at a later age because they can't get their life insurance approved. And life insurance is something that you are required to have to access a mortgage. So we recommend, the earlier you can get your life insurance, the better it is for you, because it's going to be a lower premium. So that's something to think about. Then you have the consolidation phase, which is for the age 30 to 55 age bracket. And we're hoping within that stage, because you would have started earlier by investing in your land, you would have already gotten your mortgage. And so by the time you hit 55, your mortgage is paid off for. At that stage, what is important to start thinking about is your retirement investment. And again, it works out better for you if you start to invest in retirement at an early age because of the law of compound interest. So you're going to have to invest less in order to get a higher return. If you wait until you're older, which most persons also tend to do, you're going to have to put in a lot more to get the same return. So it's important to start your retirement accounts by the age 30, 35 as well, so you can benefit from the compound interest.
Do you think young persons are seeing the significance of investing in their life insurance, even in a piece of land, at an early age?
not really. So that's why we try and do these sessions, to open up their eyes. Because as I said, a lot of times they think it's difficult. They will tell you, oh, it's so difficult to access. But that is really not the case. It's just the perceived notion that it's difficult, and they gravitate quicker to getting a vehicle loan. But in reality, the requirements are less. It's easier actually to access a land loan than it is to get a vehicle loan.
But do you think more financial institutions need to collaborate in order to get that message across to the younger persons?
I do believe so, as well as the issue. Sometimes it is challenging, getting persons working with the sellers of the land, because that sometimes is an issue. So we do try as much as possible, if we hear, to collaborate with these sellers, to make that information available to persons when they come in. So once we do know that there's somebody that is selling lands, then we will say, we can provide you with that financing. So we are trying to do that type of collaboration.
So you're saying that you try to make the process as seamless as possible.
Yes.
In order for persons to apply for these loans more.
Yes, and we also have worked in terms of the housing projects.
Mm-hmm.
We provide financing for Chapel Homes, National Housing, Willoughby Homes as well. You can get your financing here at the credit union for those, because they really want our members, to have access to affordable homes.
Thank you very much, Mrs. James Roberts. We're going to pause for a commercial break. And when we return, we will be discussing a spender versus a saver. We'll be right back after these messages. Thank you for staying locked into the apex of training and development. We're here with Mrs. Tamarie James Roberts discussing money management. Mrs. Roberts, before the break, we mentioned that we were going to look at a spender versus a saver. What are some of the distinct characteristics of a spender versus a saver?
A saver is someone who's always thinking ahead for the future. They are very organized. They tend to utilize budgets. They can make the hard adjustments if needed. They don't have an issue with downsizing if it means that it's going to result in them being able to save money, right? So they're always planning ahead. They can stick to their financial goals and follow the plans that they have in place to meet these goals. A spender, on the other hand, tends to be someone who lives in the moment, so they're not too concerned about saving for tomorrow. They're more about satisfying their needs presently. And so a spender, may have financial goals, but it's going to take them much longer to actually obtain these goals. And a spender, rather than actually saving money, more times you will find them withdrawing monies as opposed to saving. So those are the main differences between spenders and savers.
Would you say that a spender is more prone to debt?
Yes, spender is, because they're not necessarily concerned about how it is that they utilize their monies, because as I said, they're not thinking ahead. They're just living pretty much in the moment. And I'm sure you have friends that will tell you, look, let tomorrow take care of itself. I'm just going to live for today.
But what are the consequences of adopting that mindset?
We always try to encourage persons that you need to save for a rainy day, right? You never know. We don't have control over the future.
Especially during COVID-19.
Exactly. And though you may not want to be concerned about these things, it's a reality. You could lose your job. You could become sick. you could end up with a reduction in income, which has happened, as I said, in this season especially. And if you weren't saving any monies, you are going to have to depend on people to assist you. So that's why it's very important to practice good money management, to be committed to a regular saving schedule, and to really think about your future, not only for yourself, especially if you have loved ones that you are responsible for taking care of.
How would you define debt?
Debt is money that you're contractually obligated to repay within a specified period of time. A lot of times when we do our presentations, persons tend to think that debt is something that is negative. And what I say to them is that debt itself is not good or bad. It's the purpose for which you obtain the debt, right? A lot of times, as I said, persons obtain loans, for instance, for luxury items, for a trip, for nothing tangible. And then you have this large payment that you have to come back to. And then you become frustrated, and then you blame financial institutions and so forth, right? But if loans are created to ensure that persons were able to access finances to help themselves. So it wouldn't be wise for you to utilize all your savings, for instance, to build your home, because you will come across persons that say, oh, I'm not taking any money from the credit union because I'm not paying back this bunch of interest. But if you use up your savings as well, that is not wise financial management, because if you become ill, somebody said that to me one time, if you become ill, yes, you have your house, it's debt free, but you have no money to go to the doctor. Are you going to take a piece of your house to the doctor, a piece of the concrete? So there's a balance, right, in terms of how you utilize debt. Once you're utilizing it for purposes that are beneficial, then it can work for you.
Mrs. Roberts, what are some of the worst forms of debt?
In terms of the worst forms of debt, that would be debt that has very high interest rates, and so that would include your credit card debt, as well as debt from a lot of these payday companies. And when we say payday companies, it means institutions where you have a very short time span in which to repay these loans, right? And the interest rates from these payday companies can be as much as 48%, and a lot of persons don't recognize that. So if you borrow $5,000, for instance, and the interest is 48%, it means you're going to pay back almost double.
Yes.
And sometimes that's within 1 year.
We're going to have to pause for a break, and when we return, we'll continue on the subject of money management with Mrs. Tamarie James Roberts. We'll be right back. And we're back on the Apex of Training and Development. We're here with Mrs. Tamarie James Roberts discussing money management. Mrs. Roberts, before the break, you mentioned some of the worst form of debts are payday loans and credit card debts. Tell us, what are some of the challenges persons face when trying to get out of debt?
So some of the indicators, we normally tell persons to look out for is if it's the case where you are unable to save anything at all, right? The recommended rule is that you save between 5 to 10% of your income every month. So for somebody who makes $1,000, 10% would be $100. So between $50 to $100 would be your targeted amount. So if you can't even meet that target, that's an indicator that you are struggling with debt. If it's the case where you have a checking account, and for instance you are writing checks, like today you write check on a Friday afternoon because the bank or the credit union is closed, and you're trying to scramble to get monies on your account before Monday, then that is an indicator. If you're getting calls from the collectors, that is a sign. If you are hiding your statements and so on from your family members because you don't want them to see, then these are all indicators. If you have a credit card and you maxed out your credit card, or if you're using your credit card for everyday purchases like grocery shopping and so forth, these are all indicators that you're struggling with debt. In terms of some of the challenges that persons may face in terms of overcoming debt, a lot of times some persons have a difficult time making, lifestyle changes. So perhaps you were working for a certain amount of money because of COVID, as you said, and other factors. Your income has been reduced, but adjusting to this reduced income is difficult, and so you prefer to borrow or use credit cards, to maintain this lifestyle. For other persons, what we realize is that they may be in denial, so they just tell themselves everything is okay and avoiding reality. And then for some persons, they're just not aware, so that is why they don't know how to even begin to get out of debt. And so that's why these education sessions are so important to help expose persons to the information and the ways in which they can make certain changes and overcome debt.
So these are just some of the ways one can overcome debt.
Yes.
Mrs. Roberts, it was a pleasure having you on the Apex of Training and Development. And we look forward to having you a second time to discuss part 2 in money management. I believe you have a lot more to share. Is there anything you would like our viewing and listening audience to take away from the subject of money management?
And if you're at the point where you think you're overwhelmed with debt, meaning that you have loans everywhere, you pretty much have loans at several financial institutions, and so at the end of the day, you're not taking home any money. What we normally recommend is that you get a debt consolidation loan, right? And that's where you would come into the credit union, for instance. You bring all your statements from all the various places that you owe, and then we will give you one loan that's going to be at a lower rate, because the highest interest rate that we would charge is 12%. And so you only have to concentrate on making this one payment. So you would have gotten rid of your 40%. If you owe the payday company, you would have gotten rid of your credit card, 21%, and you concentrate on this one payment. And so by doing that, you should gain some control and some financial freedom. So for anybody who's overwhelmed with that, that is one thing that I would recommend, that they get a consultation and see how they can get a debt consolidation loan.
This was such an intriguing, invigorating, and informative discussion, Mrs. Tamarie James Roberts. It was a pleasure having you on the Apex of Training and Development. And as I mentioned earlier, we look forward to having you on a part 2.
Thank you so much for the opportunity to share money management tips with the public.
And you're most welcome. On behalf of the production team here at the Apex of Training and Development, we'd like to thank you, our viewing audience, for tuning in to yet another riveting and invigorating session. And we look forward to having you on our next episode. I'm your host, Karen Casimir.
This episode of the Apex of Training and Development show was brought to you by the following sponsors.